This is Matthew Cratter from Trader University, and today I want to talk about how Bitcoin is falling again, as well as talking about some future price targets for Bitcoin. So make sure you watch this video all the way to the end when I'm going to be addressing Plan B's model and what I think is happening there. So I've been getting a lot of panic DMs and emails and texts. Overnight, Bitcoin got down to about 20% off its all-time highs, currently trading down about 16% at just over $57,000 per Bitcoin. There has been some technical damage on the chart, which we don't talk about very often. We are now trading below the 50-day moving average, so it looks like we've made a bottom at 56,000. So what exactly is going on here? I would say that this is just Bitcoin doing what Bitcoin does. I believe we're still in a very strong bull market, maybe a more extended bull market, but I don't think this volatility is anything to worry about. And for people who've never really seen free markets before, Bitcoin is a free market. It's global. It trades 24/7. There are no circuit breakers, no lockdown limit, no emergency Fed meeting, etc. It just does what it does, and no one can stop it, which is a really nice thing about it. With the traditional stock market, you have circuit breakers that try to stabilize things, and then you'll have the Fed coming out with manipulation. It's very different with Bitcoin. The interesting thing, though, is that most people say that they're waiting for a pullback to buy in Bitcoin, but then when a pullback happens, they don't end up buying anything. So make sure that you're not one of those people. And also make sure you know what you own. I've been getting a lot of comments in my YouTube comment section about the best thing to do is basically to trade alts and then somehow trade back into Bitcoin. The problem with this is we never know exactly where we are in the cycle. We never know what's going to happen. And meanwhile, you have to live your life. You have to try to live without stress as well. So my question for you, if you're pursuing this strategy, do you sleep well at night with your quote unquote crypto portfolio? Are you actually buying and selling dog coins at this point in history? When we have a chance to overthrow the Leviathan, and will you be one of those who tells their grandchildren that you were mostly focused on Shiba Inu and Doge at such a historical time? There are a lot of charlatans out there. There are a lot of people who try to mislead people about Bitcoin. Raoul Paul is one of them.
If you want the dirty truth, you should never own Bitcoin. The actual truth is you should own alts or stable coins. Because when Bitcoin outperforms, it's generally when the markets are falling. And in which case, you shouldn't own Bitcoin. You should just own stable coins. And when the markets are in a bull run, generally the alts outperform, particularly the large alts, so like Ethereum. And therefore, at that point, you should own those. And maybe.
So the problem with this, of course, is as I just said, we don't know where we are in the cycle. And it is true that junkier, more risky things always outperform safer, more conservative things in a bull market, but they also go down a lot more in a bear market. So Raoul Paul makes it sound very easy that you could just trade in and out of these alts and then hang out in a stable coin when things are going bad. But it's much more difficult to do this in practice. And I'm skeptical that Raoul or anyone else can really outperform Bitcoin. And it's compounding on a post-tax basis over the next 1 year, 5 years, 10 years. I don't think it's going to happen. I don't know of anyone who outperformed Bitcoin over the past 10 years. And I don't think the next decade is going to be any different. So don't be led astray by the siren call of alts and this sort of trading that has the goal of ultimately making more Bitcoin, or even if you take it to the extreme like Raoul Paul does, saying that you should never own any Bitcoin. Meanwhile, if you do own a lot of these alts, be aware of pre-mines, be aware of Silicon Valley folks dumping on you. If you're not aware of what the Solana investors think about you and how they're planning on dumping on you, make sure you watch this video that I'll link to in the description notes below. Meanwhile, for true Bitcoiners, hodling is hard. It's very, very difficult, and you're never going to make it if you just trust other people. And you shouldn't trust me as well. You should listen to what I say. You should read all the links that I put in the description below my video. And you should think for yourself, because I could be wrong about things. Remember a few years back when I was very bearish on Tesla, terrible, terrible call. I was able to turn it around and get long Tesla eventually, but I do make mistakes. And so as a result, you need to be able to read and listen to what I write and the videos I put out. Think about it for yourself. Come up with your own conclusions. And it's inevitable that you will be tested during sell-offs. And what you do with those sell-offs, whether you buy more, as I've been doing over the last 24 hours, buying more Bitcoin, or whether you panic out, or whether you jump out of Bitcoin trying to ride a faster horse, whatever happens will be the net result of what you really believe. And so ultimately, you can't trust other people. You need to do your own research, and you need to come up with what you believe in as well. You also need to understand Bitcoin at a deep level. If you're interested in the space, if you want to get to know it, watch my videos, learn Bitcoin at a very deep level. Go down the rabbit hole. Don't listen to the headlines that say it's a Ponzi scheme, etc., that it doesn't have intrinsic value, or that various fake Satoshis are the real inventor of Bitcoin. You need to go down the rabbit hole and learn this for yourself. Being a Bitcoin hodler, it's very simple, but it's not easy. Here are a few guidelines. Don't try to time Bitcoin, as we said. Just dollar cost average every day, every week, every month. If this means buying a fixed dollar amount or a fixed euro amount or a fixed yen amount of Bitcoin in a very methodical way, where you're not trying to buy the dips or buy less at the peaks. This is very, very difficult to do. Also, don't keep checking the price if you're going to hodl for the next decade. These two actions contradict each other, and you will be telling your unconscious mind, essentially, if you keep checking the price, you'll be telling yourself at a certain level that you're not really in this for the long term. Also, don't use leverage. A lot of people think they're too late to Bitcoin, and so they panic and they try to trade dog coins instead, or trade other altcoins, or use leverage and try to make up for lost time and lost ground. This never ends well. You may have a big win. Maybe you bought some Solana and you did really well. But the problem is, if you don't know what you're doing and you keep rolling the dice, you're going to end up losing everything. So it's much better. Everyone has always believed that they're too late to Bitcoin. When I was buying below 10,000, I felt like I was too late. Even people who were buying below $1 in 2011 and 2012 thought that they were too late to Bitcoin. So don't make it any more difficult or complicated than it needs to be. Maybe just buy a little bit of Bitcoin every single day. Don't watch the price. Go outside. It's almost the weekend here. Get some sun. Spend some time with those that you love, because the only thing scarcer than Bitcoin is the length of your life. Time is the most precious commodity. Meanwhile, Bitcoin is something that at least I believe you can depend on. It has, we know it's monetary policy for the next 100 years and beyond. It keeps cranking out a new block every 10 minutes on average. Bitcoin is dependable and reliable, and it's being built in a very careful and conservative manner. The base layer is being built out slowly and carefully, and is intended to be the monetary foundation for the next 1,000 years. The Taproot upgrade, as we talked about in a video earlier this week, the Taproot upgrade was the culmination of a lot of dialogue and a lot of ideas over the past 8 years, was finally activated. It's going to take many more years before it's being fully utilized. Bitcoin moves very slowly, very carefully, but this is what you want in your base layer money. By contrast, a lot of these alts, especially Ethereum, pride themselves on moving fast and breaking things. And that's great if you're running a Silicon Valley company. But when you have a protocol that stores over $1 trillion worth of value, you don't want to move fast and break things. This is not how money should be treated. It should move very slowly. And I think we reach a point where the Bitcoin block, the Bitcoin base layer, basically ossifies and becomes this very solid foundation, and there aren't any more upgrades, that it stops changing. Meanwhile, when you move fast, when you move quickly and break things, you end up with getting wrecked. And this is an endless story in the DeFi area and in really everything that Ethereum has ever touched, from the DAO hack to recent DeFi exploits. Meanwhile, Bitcoin, if you watch my video from a couple days ago about stablecoins, Bitcoin is not volatile. One Bitcoin always equals one Bitcoin. Bitcoin is the scarcest asset in the universe, and it only looks volatile when you price it in dying fiat. But fiat money, fake money, loses a little purchasing power every day, every week, every month, And when the central banks really crank up the money printers, as we've seen in the last 18 months, fiat money loses its purchasing power much, much more quickly. This is why we see huge fuel bills, grocery prices skyrocketing, stock prices skyrocketing, real estate prices skyrocketing, and Bitcoin prices skyrocketing as well. So you have to ask yourself, are you willing to ride out the volatility that's not actually volatility when you understand what Bitcoin is? Do you want to own a diamond, or do you want to own a melting ice cube, which is what your fiat currency is? Don't forget, Bitcoin is the threat. It is the only real threat to the current system. It's rat poison to the current system, and this is why fiat billionaires and politicians hate it. We have the famous Warren Buffett quote about Bitcoin being rat poison. I love this meme. I keep showing it because it shows Bitcoin is rat poison to these institutions that nobody loves, the U.S. Banking system, which is just a terrible cartel. So Bitcoin is rat poison to the banks. Bitcoin is rat poison to the U.S. dollar. And whether you're Republican or Democrat or something else, the one thing these people seem to be able to agree on is that they hate Bitcoin. Trump hated Bitcoin. We just had Hillary Clinton coming out last night saying that Bitcoin is evil. She actually uses the word crypto, but none of the other cryptos are an actual threat to fiat currencies, but saying that Bitcoin or crypto is a threat to the US dollar. This is something that Hillary and Donald both agree on, and that should tell you something if you're still playing traditional red versus blue politics. This is a much bigger thing. We have a system controlled by central bankers and Wall Street, and Bitcoin is the amulet that drives away central bankers. It is rat poison to the banks. Meanwhile, what we have underway looks like a much more smooth and gradual cycle than either the 2012 or 2016 halving cycles. We were sort of trapped between the two of them earlier in this year. We're now underperforming both cycles on sort of an adjusted manner. I still think that Bitcoin has quite a ways to go. I still think we're in a bull market, a strong bull market, though it is frustrating to see us back in the 50s, especially in this very, very bullish time of the year. A lot of you have asked me about Plan B's model, which is what I based my end of year 200K price target on. That 200K price target uses a slightly different model than this one. It uses Plan B's stock to flow cross asset model. But we could also look at his original stock to flow model, which also suggests that we should be hitting or that we should hit $200,000 by the end of this year, or it's a little bit more precise. And Plan B elucidates this in this latest tweet, basically reminding people that his original stock to flow model, not the cross asset model, basically predicts about $100,000 average for this cycle, for this halving cycle, which began in May of 2020 and runs for approximately 4 years. So what that means is that we really should be, because we were trading for much of 2020, for example, even after the halving, we were trading below 10,000, below 20,000. And so if you're going to end up with a price average, and I can't remember if this is a weekly average he uses or a daily average, but either way, if you want to end up with an average price for the 4-year cycle from 2020 to 2024, you need to spend a lot of time well above 100K. So we spent a lot of time much closer to zero than to 100K, and this suggests that over this cycle, we need to spend a lot of time above 100K. And because we've already spent a year and a half below 100K, it really means that we should be trading closer to $200,000 in the coming months. And the reason in the coming months is that traditionally you have basically a 12-month or 24-month bull market that kicks off after the Bitcoin halving, and then those last 2 years of the 4-year cycle tend to be more bearish, as they were from the end of 2017 really to the end of 2019 and the halving in May of 2020. So we will see whether the Plan B models hold. They may break. Again, they're models. Bitcoin could, the Plan B models could break, and Bitcoin could still go on and do really, really well. And I don't see how it doesn't do really well in this era of fiat monetary debasement and clown world. But it's very important to understand what you own and why you own it. And you have to understand whether you own it because you believe in stock to flow and plan B, or whether you believe in what I have to say, or whether you believe in the Bitcoin protocol, or maybe a combination of all three. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.